Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's now take a look at the gold market. So our retracement that we discussed in the weekly report just started, and now we have to actually make the decision how to enter, when to enter, and whether it's time to enter right now, or maybe we should wait for something else. How in general background stands, so whether it's ready for a position taking, or better to wait a bit and see what will happen. In general, if we take a look at the cross-market analysis, in all time frames, on all markets, we are watching for a pullback. So this is a very interesting combination on the euro currency and the British pound around the strong multi-support areas, suggesting that at least minimal pullback should happen, which is why it might be not really very small on the daily chart. On the 10-year bonds, yields have hit 4.8%. On the dollar index, price has reached 110 area. So actually all markets have reached some epic numbers, round levels. Some market stands at the same time with the overbought, oversold conditions and around very strong support and resistance levels. And if we're talking about the pullback on the euro currency, for example, it's even more reliable to consider this possible upper continuation on the gold, because when the euro currency was in the downward action on a really big resistance from rising 10-year United States yields in the dollar, in this same moment gold market was showing this upward action, resisting really great to the headwinds. Now technical pullback has happened. This is normal. Market at the fib level, market has completed important targets. Some response is absolutely natural performance. But with the expectation upper continuation on the forex market, it is more even so on the gold. That's particularly what we will be watching for. So here is mostly watching for this ABCD pattern in the beginning, but then we will see how situation will develop, especially on the weekly chart. So maybe we will start thinking about some more extended targets. On the following time frame chart, you could see that here is mostly response to 27 fib level and completed XOP, which is also COP, minor 618 extension of this larger ABCD pattern on the daily chart. The fact that market is returning back after testing the trend line, it doesn't mean that it's failing to break it. It's just the byproduct of the existing strong resistance level here. It doesn't mean that market has failed to break it. So it mostly not the reason for this pullback is mostly not the resistance line here, but this strong agreement level. That's what has triggered the pullback here. So on the hourly chart, the first level that we have specified has been achieved. 26.65, slightly even lower, 26.63. Now market shows the pullback. So the major question is whether we should buy here, or it still makes sense to wait for our preferable level around 26.46, 26.53 in confluence. Currently, guys, it's difficult to answer definitely, and here is why. If you will take a look at very low time frames, for example on the 15-minute chart, you could see that here market might be forming the hand and shoulders pattern, right? So from that standpoint of view, it might be the same pictures on the euro currency with some minor ABCD and reaching of the area that we have specified. At the same time, you can't not recognize here. You should recognize, in other words, the bullish dynamic pressure. We have bearish MACD with a flat standing of the price, suggesting that it might be bearish dynamic pressure. The market could accelerate right from here to the upside. What we could do in the current circumstances? The answer probably you know. This is splitting of the position. Take some minor part here and just be absolutely in a comfortable situation. If market will accelerate, that's great. You will have at least some position to work with, and later you could add more. Or if market still will drop, you get the bulk of your position at the predefined level and you get average grade level. So that's some conclusions that we could make here, because here, as you can see, both suggestions might be correct, and you can't say definitely whether it will be some deeper pullback or not in the current circumstances, because market actually, to be honest, stands in between the two levels that we have specified. So here was some halfway to the confluence, so it was slightly below than the first level that we have considered, and it's moved lower. Now it's turning back. Based on the picture on hourly chart, here we have good looking engulfing pattern. It also suggests a hand and shoulder shape on lower time frames. Choose the background that you like more. If you prefer to wait, you're a bit more conservative, that's great. You could wait relying on this possible hand shoulders. If you're afraid to miss the positions carrying, to miss the entry, just to keep absolutely comfortable in the current situation, not worry about this, think about minor position taking, 25-30% of your trading lot, and see what will happen next. But in general, overall background and overall trading plan that we have prepared in the weekend remains the same. So we're watching for the same levels to consider long entry. So we keep the same bullish context. We do not see currently reasons to cancel it. It's currently works absolutely fine, and we do not have any bearish signs that could put the shadow on the perspective of this plan. So let's see how situation will develop here.